All right.
Good deal, Brock. I'm excited. It's Friday, May 10th, here for Real Fridays, and as you know, and many of those that watch this program know that Real Fridays is an opportunity that we have real talk about housing, mortgage, real estate, anything on the inside of what's happening in the mortgage business, real estate, technology, innovation, leadership, what's happening with companies, who's growing, who's not, why. In some cases we call out even bad actors in the business, or those who are doing really, really good things. So one of the bad actors is a guy named Jeremy Potter. I can't believe he's blowing us off on for this Real Friday.
The worst actor. Yeah.
One of the, in as a caveat, of course, one of the best technology and legal consultants in the business is Jeremy Potter. So we love you, Jeremy. I know you're busy and you weren't able to jump on this, but I think Brock and I can hold our own as we talk about Real Fridays.
Yeah, we'll figure it out. Yeah, good to see you, Rick.
I attended, it's interesting, Brock. I attended a kind of a mastermind, kind of a private group that Renee Rodriguez organizes. And Renee has just blown up over the last couple of years, really since COVID. And I've known Renee for 20 or 25 years. And he, and one of the things that's so subtle and so obvious, but one of the things was just the how to improve upon your video podcasts. And one of which is making sure that obviously there's eye contact with the camera lens. Lighting is a big deal. The sound quality is a big deal, but then also like even the headspace, originally I had my camera kind of down, and it was like really
like this.
It was just kind of like, more like this, and he was like, Rick, well, the ceiling fan is a distraction. You're looking down. I'm looking at different monitors, and his whole thing was get a better travel, because I'm traveling right now, but it was to get a better travel, camera, and he recommended a what's called a DSLR camera that really captures like a 4K kind of higher definition experience. Minimize any of the sort of the distractions, but then also like in your case, there's so much space above your head and around your backdrop that it kind of takes away from even the subtle messages of what Brock Cassidy has to say about any particular subject. So
there you go, free consulting for my Zoom etiquette and my podcasting. Thank you, and thanks, Renee.
No, it's amazing how the subtle things really matter when you're doing Zooms, and even how the lack of clarity in my camera, like your camera and your laptop is better than mine, clearly, because I feel like I'm a bit more hazy than you. And that's the one thing, if you look at Renee's podcast, or you look at his posts on Instagram or on TikTok, the quality of his voice is so clear and the quality of his videography is so good. It's like, cinema ready good, that it just adds to the level of attention. Because when you only have 3 or 4 seconds before you scroll to the next reel, the quality of that is going to determine whether or not it could be that one extra hook of somebody staying an extra 5 seconds or 5 minutes,
Yeah, absolutely.
But it's called that particular coaching is called Amplify Mastermind Coaching. And I think you can just go to his website to sign up for it. I think I think there's a small charge for it. It's not that much, but it's paid for a long time ago. But I think that it's so important, because I think sometimes we get so lazy on how to do these video podcasts, and you end up losing the attention to detail that often becomes the reasons why these things are, become more successful, Yeah,
no, I have no doubt. Definitely. And we've, part of this show was that we're, all three of us are on the road a lot. It sounds like you and I are both on the road right now, Potter as well. So we've kind of tried to keep the continuity, but probably many times losing some of the quality. Although I liked when Potter was driving across Kentucky doing it from his phone. So, but the viewers may not have.
I'd like to hear more about his because he had attended that leadership conference, and I think that's one of the things that I do is I try not to have any set meetings on Fridays. Like I try to have Friday to be a day where I reflect a little bit more, my Fridays and Saturdays, where I kind of take a step back, do a little bit more analysis on reports, a little bit more analysis on the market. And I look, because Jeremy, one of his strengths is that he's very reflective and very philosophical in the way that he sees kind of the underlying motivations of processes, of technologies, and of companies. But he apparently he got, he was really impressed with the retreat that he attended in Asheville, North Carolina. And I just would love, he started getting into it a little bit around some of the takeaways in one of our podcasts previously, but I'd like to hear a lot more about it, to be honest with you.
Yeah, we should pencil that in for next week. I know he was traveling today, like I said, but yeah, it sounded like that went really well. He's got a bunch of different irons in the fire. So I think he's enjoying it as a good time to like do a bunch of different stuff, go to a bunch of different events and kind of soak it all in. So makes sense.
Yeah, no, he's truly one of the more impressive thought leaders legally and from a technology workflow standpoint to really understand, like, what are the lowest hanging fruits and where to save money and to drive efficiencies for a mortgage company. I just think his biggest challenge is just getting out there and getting involved and getting people to enlist his services, or companies. But so you're in California purely on your relative's wedding or something. You have a
friend's wedding. So I'm in Southern California, going to a couple different spots. Malibu is where the event is on Saturday. But yeah, more or less just a mini vacation to come out here.
Yeah, that's fantastic.
I haven't taken a whole lot of days off in the past. So Wednesday was my 1 year anniversary at NewsZip.
Fantastic.
And so, I was reflecting. I was like, I don't know if I've really taken any days off. I think one or two to travel a couple times. So I was talking to the guys there. They're like, I don't know. You don't have to be online. You don't have to do anything. So I'll do this and this will be it. Go to the beach or something the rest of the day. But it's also only 9:30 out here, getting used to the Pacific time. So it's kind of nice.
That's fantastic. Now, so while you're out there, are you going to visit any like New American Fundings right there in Orange County? And there's a handful of other companies, AFNs right there in Brea.
Yeah, I don't think so. Not this trip. I was thinking about stopping by the Mortgage Innovators Conference. It's not too far away. I got out kind of at the tail end of it. I just traveled yesterday afternoon, so didn't make a ton of sense. So I think this is going to be strictly personal travel, but yeah, I obviously love all those companies and know a bunch of people that are around. So maybe if I have some free time, I am going to see a couple of friends that are in like the fintech startup space in LA. So that'll be that. So that's not really mortgage people so much as like startup tech people who I don't get to see very often. The mortgage people, at least I can see them at events. But the other kind of peers in other, insure tech or fintech or digital banking, those kind of things. There's several good hubs for it out here in California, San Francisco, and LA. And so I have some friends in that space that I actually am going to see. So I guess that'll be the one semi-relevant thing.
Yeah. What's your week been like? Obviously, yeah. Tell me about your week.
Yeah. So the early part of the week was really busy because I was fitting basically 5 days into 3 days, taking yesterday traveling, today off basically. So we had a lot of different follow-ups from the HousingWire conference, honestly, as well as the credit union conference I went to that same week. So I feel like there's still like a deluge of people I met at the events that we're talking to. We're in the process of, I think I said on last week's call, we're in the process of fundraising right now. So, I'm not running point on that. Our CEO, who you've met, Adi Pavlovich, is, and so he will bring me in kind of on call number 2, call number 3, when they want to get a feel for the rest of the team, the rest of the business. So now we're starting to have a bunch of those calls. So I've been all over the place: investor calls, strategic partner calls, and then a lot of the normal straight and narrow of talking to our mortgage lender partners.
Yeah, no, that's fantastic. What, how much are you guys raising in this round, or is there a certain target?
Yeah, we're raising $4 million on, well, I mean, we have a bunch of committed smaller checks. Someone still has to define the exact terms, but it's going to be in the realm of $4 to $5 million at around a $20 million valuation, probably.
Yeah, that's fantastic.
Yeah,
that's fantastic. No, I mean, you're a big reason for their growth. So, and I know, Adi, I'm sure, realizes that. So I think that's great.
Yeah, it's been fun for us. Certain investors are turned off by the whole space right now, as you can imagine, but others are really impressed that, growing against this much headwind, they are impressed by that. And there's a lot of startup and tech kind of discourse about companies that can still grow during a down market are the ones that end up doing really well. So we're, trying to be an example of that.
Yeah. It's interesting. In having raised capital before with investment bankers, it's amazing how the contrarian deal tends to really win out. Like the market is suppressed right now because of, tightening in inventory and mortgage rates and in sort of certain economic inflationary volatility metrics, right? But that's exactly the time you get in, right?
Yeah.
Everyone always tries to get in when it's too late, and then they end up wasting a lot of investment capital. It's so stupid. I mean, it's so common sense. The problem is they don't understand the space well enough. And they don't understand that, the next 3 years, putting aside 2020, I think the next 3 years are going to be probably 2025, 6 and 7 are going to be probably the best 3 years we've had in the last 20 years.
Yeah, that's how we feel. We're trying to get our business as well positioned and, in as strong a market share position as possible for when the market grows. Exactly. One shout out I'll give to an investor who I think is doing a really good job is Chris Bixby. He's not an investor in NewsZip. He's a friend of ours, who may be a future investor, who knows. But I know you met him at least briefly at the HousingWire event at one of the happy hours with me. He's one of the investors I'll give a shout out to that has been at the industry events, been understanding every inch of the industry, and seems like he's really interested in deploying capital now because of all the reasons you just said. The folks that grow now will be the ones that win in the next cycle. So, not like there's plenty of investors that are doing the right things too, and that's one example.
Yeah. No, look, Bill Mitchell, he runs Loan Pass. I'm really impressed with Loan Pass. Loan Pass is, I was fortunate enough to meet both Bill Mitchell and one of the, I think the founder of Loan Pass, a guy named Bill Roy, kind of a famous, a real famous sort of investment banker in the business. And just an incredible platform, really innovative, very flexible, architecturally built to really accommodate multiple channels of business, products and pricing, and different sort of customized pricing strategies and margin strategies. I've historically been a big fan of OB, but OB is kind of like Ellie Mae and Calyx and a lot of these older platforms. They just haven't quite innovated, to meet sort of the changing circumstances of lenders or different product types. And boy, I tell you, when I saw a demo of Loan Pass, I was kind of blown away. And I've known Bill for a long time. Bill's one of the higher integrity sales leaders in this business. And Bill Roy is an incredible guy. I really want to get one or both of them on one of our future podcasts, because I think that they're kind of. I think we had Pauly. We had what's his name, Parvesh, on Pauly one time. I think we need to give some equal time to these guys, because these guys are phenomenal.
Yeah, no, that sounds good.
Have you seen their platform?
No, I haven't. I know of them. Appreciate seeing them around events and stuff like that. But no, I've not.
I just think it's interesting because I there's so many applications that they could be leveraged for. One of which I wouldn't even mind having realtors the ability to kind of run a quick pricing, and then when you run a pricing scenario, for a consumer, just to kind of get a sketch of like what the monthly payment would be and what generally, not doing an application, but kind of showing them, not providing an official quote, but kind of showing them that this is basically where you'd land with their preferred lender.
Interesting.
And then having that information,
that could be
and then
interesting.
having that information from LoanPass pushed to the LO automatically, get assigned to the realtor, that an organization like yours can ensure that it remains sticky and intact. I think would be a really, really interesting innovation. And I don't even think it'd be that difficult of a stretch given what they're doing.
Yeah, that's an interesting use case. I think I don't know, it was either last week or 2 weeks ago. I think it was last week we were talking about NewZip kind of pivoting a little bit to also nurture like leads that aren't yet pre-approved and leads that aren't clients that are not yet, farther along in their mortgage process. Yep. So our team, I like that use case a lot, actually.
I like it a lot because it continues to blur that line. It not blurs the line between LO and branch or in real estate agent, but it really marries the two in a really good way. It doesn't erase one or the other. It really binds them together in a really unique way. And every lender's got different pricing. So if I'm a realtor and I'm working with Rick Rock from Sierra Pacific, like and Rick Rock from Sierra Pacific gives them let's say it's a white labeled solution. What would your company call it? Do you think? Let's just make up a name.
The Sierra Pacific Cash Rewards Program.
Yeah. Well, I mean, okay. So let's call it
Real Estate Rewards Program.
Yeah. See, a lender would want to get away from the idea of cash awards to a realtor. So let's call it the NewZip program. Let's call it the NewZip RE Price Connect, right? The Real Estate Price Connect, right? And so I'm saying, hey, we use NewZip, and in this cool component, Mr. and Mrs. Realtor, you're able to price out a loan using LoanPass's, pricing and integration with us as a lender. And as soon as you enter in first name, last name, some of the key attributes of the consumer, Mr. and Mrs. Realtor, that information gets assigned to me as the licensed loan officer, right? And it's all facilitated by this relationship that NewZip creates with LoanPass. And then be able to, and then that way the consumer kind of knows what the monthly payment's going to be on a specific home in a specific zip code at this particular specific time within the market, right? And the real estate agent doesn't have to get over their skis. They don't have to actually start talking to the economics because the information goes to the loan officer. The loan officer calls the consumer and says, hey, you go out and find that house. I'll figure out the economics. Let's meet after you meet with your realtor. And thank you, NewZip, for helping facilitate this. And meanwhile, it's powered by LoanPass. Yeah,
no, I like that. I think even in our case, it's even easier because you wouldn't even be out to the local agent yet. You'd just be talking to basically the concierge from NewZip, who is a licensed real estate agent, but could get to know the process really well. So that's why that's where we fit the pieces together really well. Is by the time we get it matched to a local agent, the client is going to be fully ready to transact. They are going to be fully pre-approved. So it sits with our team, and our team does a lot of the legwork that you're talking about here of, are you going to be able to afford a home? What's the pricing look like? What's before we ever match it out to a local realtor. So I think there's a pretty easy use case there to do what you said with our team, with our concierges.
I only want about 6 or 7% equity in that particular business unit. So, Addy, if you're watching this, just keep that in mind. Put that in your deck. Let's start pitching that to investors. Let's go.
All right,
let's go. We can bring LoanPass to the table, and we can get rocking. But I think that, and then Mr. Bill Our founder, Bill Roy, said to set out to deliver the rules-based engine that does pricing. Yep. Delivers in the industry's fastest, most flexible, configure rules-based decisioning engine built from the ground up. I have to, from a flexibility standpoint, in my review of it, it was substantially more flexible than Optimal Blue. And I love Optimal Blue. I've been a big fan of Larry's, the platform for 20 years. But boy, I tell you, it was a breath of fresh air looking at LoanPass and looking at it from the perspective of like, how do I actually price margin, like a margin strategy out, and introduce new products into the platform. So
that's good to hear.
Yeah, no, it's a great platform. What else? I'm trying to think of the markets are really interesting, is really behaving, interesting. I mean, obviously, we have the 10-year treasury went down, I think almost 30 or 40 basis points this week. And that's a huge deal, right? I mean, that lowered rates.
Everyone's saying pricing got a lot better and rates came down a lot. I don't know if I've really seen it yet, but I guess we're starting to the last couple of days. But we're working across so many different lenders. It's sometimes hard for us to see how they all compare. But yeah, what are you seeing on your side? Like, how much do you think your rates have come down, like 30-year fixed?
Well, quite a bit. I mean, they've come down probably, or there was a price improvement of probably 40, 50 basis points, on our side, on the retail side, which was, I think, pretty aggressive.
Yeah.
And so, yeah, no, I mean, and the originators felt it out in the field. I think that, it was a welcomed, I think that happened on Tuesday or Wednesday, but it was a welcomed improvement without a doubt.
Yeah. Just looking across all our lenders, it looks like the last 24 hours or so have been really good across a bunch of lenders for like new purchase applications. So, good to see. We definitely need more people getting out there. Home buying season, should be underway. And I feel like it's all lagging a little bit with how much rates hiked.
Yeah. Do you know, how is that, how is the loan transaction volume, gone for you guys? Have you seen a steady increase?
Yeah. I mean, the November and December were, and keep in mind, so we're across like 27, I think right now, different lenders. We have a couple of really large ones, some very, very small, niche, like credit unions, some kind of mid-level. So it's all there. They all vary a little bit. Like the credit unions were a lot steadier when the rates were really high. Then we have some like online lenders that are doing a lot more now, that just in the last few days with rates dropping a little bit. So it all varies, but yeah, we've seen March was amazing. March was, by many measures, the best month in our company. Partly because we launched New Res in February. And so we had that full March effect, with another really large partner. And April was down marginally, but very similar to March. And then this month looks like it could be, our best probably, or at least close to it. But yeah, Q4 was rough. November was really rough. December was a little better. December ended up a little better than we thought. January was up a little. February was down a little. March was amazing. So I think it tracked pretty well to the market, tracked pretty well to interest rates. The big twist for us is that we onboarded a few new mid-sized partners in March and New Res in February, that are now kind of in production. It kind of takes like a month after signing a partner to get them fully in production usually, with us actually getting their business.
Yeah, I mean, that's a huge win. New Res is just a massive, massive win.
Yeah, they've been amazing. Yeah.
And Julie's been great. I mean, she's so smart, and I love her, her fresh perspective on partnerships. I mean, she comes from a very financial, very aggressive financial perspective, as opposed to kind of a traditional mortgage perspective,
The Goldman Sachs to WeWork to EasyKnock is and she just with some commercial real estate stops along the way. Is not your typical mortgage strategy background, but it's she's like one of my best friends as well. So we compare notes on everything. But the rest of the New Res sales directors, sales managers, individual LOs, it's all been really good.
Yeah, I would say in most cases, including Sierra, I would say in most cases, company pipelines are up about 25, 30, 35%.
Yeah.
And I think that, that's it. It's kind of the spring sort of season, if you will.
Right.
The problem is for a lot of mortgage companies, they still weren't profitable going into April, and rounding the quarter into May, which creates a real serious challenge.
Yeah. I have one other tidbit for you on the rate changes. We had a partner, national partner, not NewRez, but another of our larger partners was talking about their lead buying, and they started in March when rates were dropping a little bit, and there was some good conversation about how many rate drops might happen, maybe in February as well. They started buying a bunch of refi leads again, and kind of took their purchase spend down and their refi spend up, and just got totally burned. And so now they're back to, and from our perspective, it helps our business, I guess, that they're just going to refocus on purchase. But that was kind of amazing to me that it was that hard of a turn, that they were going to try to build back up refi, and then just got burned within 30, 60 days, and pivoted back to fully focusing on purchase in terms of marketing spend and lead spend. I guess I shouldn't be surprised, like with how much rates have bounced around. It's been impossible to predict, but that was an extreme case I heard.
Yeah. No, I mean that's really interesting. I mean, I think that the market is very much it's definitely heating up, and I think the rate environment is going to help. And if the Treasury continues to go down, it'll mean really good news for mortgage rates, and hopefully it'll move the consumers that are kind of on the fence, off the fence, to actually refinance or to move or buy that investment property. I know when we know that if rates get in the mid sixes again, it's going to unlock probably 2 or 3 million homes.
Yeah.
And it's going to be a massive opportunity for mortgage lenders, but also just from the savings for the consumer. I think it'll substantially help the consumer out. So the consumers need to get off the fence, but the Fed really has to help them do that.
Yeah, we have heard some more noise and some more action about like DSCR loans and other investor products in the last even couple of weeks. So interesting that you mentioned that. Hopefully we start to see some more action around those other types of loan products as well.
What conferences are you heading to here short term? I mean, I'm going to the MBA secondary here in 2 weeks. Are you going to attend that?
Yeah. I'll be at MBA secondary. And thanks for that list of events and things like that. Hopefully see you at a bunch of them. And then I'll probably go to Inman in Las Vegas in August. That's the real estate tech conference. We sometimes speak there. Last year, both Audie and I spoke. And then other than that, we'll go to MBA Annual in Colorado and see what other events are popping up. I'll also go to Acuma, the National Credit Union Conference in the fall. But I'm open-minded about going to more regional events. I just need to kind of pick my spots. So what about you? What are you thinking of heading to?
The Mastermind Conference in Las Vegas is the first week of June. I wouldn't mind attending that. Greg Scher and I are going to be speaking at the New Jersey MBA conference. That's in New Jersey on.
I've been to that one before. That's not
on June 5th.
Yeah,
I mean, if you're around, you should come.
Yeah, I might very well do that. I've gone to that before. It's solid.
Yeah, why don't you do that? And that way we can collaborate a little bit there, because I'm going to be speaking there with Greg, and maybe we can have you as kind of a surprise co-speaker. Bring you up on the stage to talk about different innovations. But it's going to be very interactive. It's kind of a main stage presentation. So I think it could be a really good. But come on out if you can drive down. You're only how far is Atlantic City from where you live? An hour and a half?
Yeah, it's probably an hour. Yeah, could be 2 hours. Could be an hour and a half. Could be It's not so bad. When I was working at Easy Knock a couple of years ago, I literally just took an Uber from our office out to the New Jersey MBA. It was like $150 because we took a couple of people, Julia included. So that was the last time I went. I didn't go last year, but yeah, it's a solid event. I can probably see you out there. And before that, NBA secondary for sure. We'll do some fun stuff in New York. Figure out if put together a dinner or something maybe with some people we know if we have a free night.
Yeah, we'll have to do that. Yeah, I'll be there Monday and Tuesday night, staying at the Marquee.
Cool.
And but yeah, no, I'm definitely looking forward to that. It should be a really good conference this year, actually, because there's a lot of product innovation happening around just how to get consumers into homes that otherwise will have to rent, right? Especially in this tight market, this market that kind of lacks affordability. So
are your friends from Crib Equity going to be there? That sounds like their shtick, their positioning in the market is right there, helping people buy that first home that are renting.
Without a doubt, and I've had I know Sierra's going to be talking with them, and Sierra would love to be part of kind of a pilot program with them to help consumers afford and subsidize that initial down payment. And they're going to be, I know they're talking to a number of different top 20 lenders across the country that I think that they're going to be a really strong player in innovating that first time home buying experience,
Yeah, we're thinking of collaborating with them on. I mean, obviously, we wouldn't push it on every lender. The lenders that want it, lenders that focus on first time home buyers. But yeah, as you know, I've worked with Bill before, and
that's right.
Had great conversations with Sky. So we're totally open minded about finding lenders to work with them together. Maybe we can do that with Sierra. Get the real estate side, save some money. The mortgage side, get some extra support. It's a pretty natural fit. So
you should definitely send me. You got to definitely send me kind of the deck, and let's set up a call. It's a little early for me just yet at Sierra because I'm only about 3 weeks in. But
whenever it makes sense.
But I'd like to organize what that use case and the business case could be, because it's like anything else. Any vendor that can actually help us close more loans, like concretely, and help us increase revenue is going to get prioritized. And then those vendors who are just dead weight are going to get scrutinized for just the cost that they are.
Yeah, I liked Jay, right? His comments when he came on the show a couple weeks ago, and he's like, my service level has not gone up, and my number of my tech spend keeps going up. No one's trying to add vendors for no reason. I mean, the way we're structured is like we're really just a real estate company that gives most of our tech away. So it's you don't even really need to think of it that way. But I totally get that everyone's fatigued from integrating with all kinds of different stuff that doesn't have immediate ROI. So yeah, that's what we're that's why we have our case studies and stuff, and look forward to talking to you about it.
Well, that's good. So let's definitely prioritize that. So probably in that first couple weeks of June, because ideally my thought process is any really innovative solution that we can implement so that it'll just increase our closing rates, are going to get done and prioritized this summer to fall with the intent and the purpose that it's going to impact production in the spring and the summer of 2025, right? So that way we can get the integrations in play, we can get the training done, any kind of literature that's necessary for realtors or prospective loan officers, all that, put it behind us. That way we could focus on the spring and the summer of 2025.
Yeah, I like that. We had a lot of success launching, partners in like Q3 and Q4 that they were a little bit less busy, and then we're totally online for this year. So that makes a lot of sense.
Now, did you happen to do you work with wholesale and retail? Is there some kind of wholesale broker benefit that we could promote and push out to our brokers?
Yeah, we haven't done that per se. We've kind of just been friendly with some of the wholesale account execs and things like that who mention it to their brokers as just another option, basically as another product almost, another offer. So no, so we haven't done that at scale, but I think it's totally possible to extend it as the loans that you do with us. You can also save money on the real estate side and expand your agent network and things like that, your agent partnership, things like that. So I think it's totally doable. We haven't really sunk our teeth into it because we've been focusing on the direct lenders, but we've signed up plenty of brokers themselves, right? So then, we could go up a level and make it a wholesale benefit that you can push to brokers yourself.
Yeah. Yeah. No, I think that would be interesting because one of the things I really like about Sierra is just its priority around, it really is kind of the, what was Greg Scherer's tagline? All for us?
All of us, right?
All about us?
I think all of us.
Or all of us. Yeah, all of us.
Yeah.
It's not a broker a better thing, and it's not even a retail is better thing. It's kind of like whatever suits the consumer the best. And we want to support both channels, and I like that. To me, it's just more of a holistic approach to the business.
Yeah.
It's always a kind of a tricky dance, but I think it's an important channel to support. So
what's your channel mix roughly at Sierra? Like how much?
About 50-50.
Yeah,
it's about 50-50, which I think is the kind of the right mix. About $1 billion or so in retail and $1 billion plus in wholesale. So I think that we'll grow. We're going to grow both channels. Both channels are very valuable. So,
and how much of it? Most of it's like typical retail where they're kind of generating their own business, I'm guessing. But is a lot of it coming out of the servicing book and like retention opportunities?
Not a lot of it, but some of it. When it comes up, we assign those opportunities to our loan officers to kind of so that way we can maintain our book for sure. We got to any servicer is going to want to retain and really manage their book, right?
Yeah. That's newer for us, but obviously with NewRez and some of the other servicers we work with, AmeriHome, a few others, that's obviously one of their KPIs for us is helping them retain purchase out of their books. So that part, but yeah, that's good to hear that you guys have that balance though between servicing, retail, wholesale. Sounds like you're in a really healthy position to keep growing it all. So
yeah, no, the company is super healthy and I just like the balance. It's not an adversarial one thing or the other. It's let's just grow both channels in a really healthy way so that the consumer gets really well served and that we just continue to maintain a very strong and supportive employee culture. Obviously that's very important just from an ops standpoint because everyone is really all in. So we have an amazing ops leader named Liz that's based in Maryland, been with the company like 15 years, and she's just insanely good. Trying to generate or drive that culture. Large companies tend to get very lazy and get very much like, you submit the request for support for whatever it is, IT, secondary pricing, could be accounting, whatever it is. And there's just no attention to it right away. There's just no, it could wait. It can wait Monday or submit a ticket. You get a response in 3 to 5 business days. And the problem is retail, especially in the broker community, but retail especially is very, very, is very sensitive to service levels, and Liz and a handful of others, like the culture is just really built to be very responsive. I think last year somebody said, and I don't know if I believe this is true. I was told this to be true, that we only missed like 2 closings all year last year.
Wow.
Which to me is an insane number because the commitment closing is the hardest part of the business because there's so many moving parts in that closing of the transaction and the transfer of funds. That's so many things that can go wrong, and it takes a collection of efforts and good process, good technology, and a tremendous amount of effort to ensure that those closings go on time.
Yeah, cool. That's good to hear. And I guess the last thing, if you did any of the kind of headlines or news this week surprise you? I mean, we talked about the rates, but there's some other interesting stuff that I feel like hit the news this week, between consolidation, between a few, especially on the real estate side. There was a lot of real estate teams have been consolidating, and it seems like a lot of the earnings have been pretty good for mortgage, especially servicers. But any of the news stand out to you this week?
It's kind of funny. I felt I sent a text to Maggie Reams, who's one of the executives over at one of the senior leaders over at Surefire. That company, that CRM company, just keeps getting kicked in the proverbial nuts.
Oh my God.
It's just so tough. God bless her. And she's like the best person in the world. It's, she grew that company with Mark Green so effectively, so well. And I just feel like there's just one negative headline after another ever since the acquisition, the Black Knight acquisition. So I wish them well, and I wish Maggie really, well, because Maggie is just such an exceptional person. But when I saw that breach, that or something like 500,000 emails went out or something. I mean, it's
from no longer their employees and everything else. Yeah, that sounded pretty rough. Hopefully it's not like going to reach any kind of like lawsuit level status, but it definitely was like not supposed to happen in terms of consent and things like that.
Yeah. But outside of that, like what were there any mortgage acquisitions that happened that I wasn't aware of, or that I'm glossing over?
No,
or was
I don't
it just
think
mainly
so.
on the broker side?
Yeah. There was a ton of real estate consolidation, both between teams and companies, just moving around as they always do, but a lot recently. And then I don't know, Guild announced their earnings with a new dividend. New Res announced their earnings with a really great improvement. UWM had their earnings, were profitable again. So I mean, those are obviously companies that we kind of knew were doing pretty well. So not shocking, but just different news like that. There were some I guess most of the consolidation was on the real estate side.
Yeah.
And everyone's as we saw at the HousingWire conference, CoStar is being super aggressive in the residential real estate space, and in Realtor and Zillow and everyone else seems to be kind of firing back at them. So that's interesting to see.
Yeah.
Good to see competition.
Guild's acquisitions don't surprise me, or their progress don't surprise me, just given the pace of their acquisitions. That didn't surprise me, a bit, but they, I'm definitely excited to realize some of those gains myself over at Sierra with some of the acquisitions and conversations that we're having. I think it could be really interesting. But look, there's going to be consolidation. Everybody knew. I mean, there's probably going to be 30-40% fewer brokerage firms as a result of the consolidation in the business. Probably more than that, quite honestly.
I think it's basically healthy that should happen at this point. Yeah.
Well, good. Well, do you have anything else?
No, that's I think that can be a wrap. But let's make sure we hear more from Potter next week, and then see what else is going on then. But looking forward to seeing you in New York in, I guess, 2 weeks for that.
Yeah, is Potter going to that too?
Both Potter and Brian View told me they're maybes. It's an hour flight from Detroit, so hopefully they both get around to it. Hour and a half, maybe.
They can, with as much as they travel together, they might as well room together.
Yeah, seriously. So we'll see you out there.
All right, brother. We'll talk to you soon, my friend.
Yeah, see you later, Rick. Have a good weekend.
Take care, man.